notice what happens right through here. Okay, notice how this price action starts to cluster. Back here, it took literally less than a day for the market to rebound. And then back here, we had several days worth of price action just hovering above that key support level. And again, what happens most times is you get a close below the level, and this is where we want to look for selling opportunities. And as promised, I'm going to wrap this up with a chart of the GBP JPY. All right, so this is the same chart we looked at in the last lesson, and it's also the same trend line. So we have a few things happening here. I'm just going to get rid of this horizontal level. Let's see, delete. All right, so we have a few things happening here, and the first one that you'll notice is that each retest takes less and less time. All right, so notice how much time it took for this first retest to happen. And then this next one took about half that time. And this one up here was about the same time too, but then look what starts happening. Okay, and in addition to that, we also get this clustering price action right above the level. And you compare that to these retests back here that happened rather quickly. And you can see how we could have used what we just learned to determine that a break lower was likely. And that's exactly what we did here. All right, so if we zoom in and take a closer look at the breakdown. Okay, so the breakdown happened right here, and it's also important to note that this is a daily time frame. So we want to trade this on a daily closing basis, and what that means is that these wicks right here don't concern us. All right, the market may sometimes do this where it trades below the level on the intraday, but the daily time frame closes above or below the level. In this case, it kept closing above it. Right, so this was not a break back here. Now the first close came right here, and you'll notice that after that close it retested the level a few times right through here, and again that's where we'd want to look for a selling opportunity. And if I zoom in even closer, you'll notice that we had on the very next day we had a bearish rejection right here. So we could have used that to actually sell the retest of this trend line. So you can see how powerful this is because the market from there ran several hundred pips. In fact, I think this move actually totaled over 1,000 pips eventually. So extremely lucrative, but also really, really simple. But the key here is to look at the amount of time it takes for the market in between retests, and also watch out for that clustering price action. Okay, so now that we've talked about the 10 and 20 EMAs, we've talked about support and resistance, we covered confluence, and we've also talked about a couple of ways to identify possible trend changes. Let's get into some of my favorite strategies, all right? And we're gonna start with the pin bar. You may be familiar with this one, and the basic idea is that this candlestick pattern shows a rejection of support or resistance. All right, so we have the tail, the body, and also the nose. Now, what makes this candlestick pattern effective is this right here. So the tail should be 2/3 of the entire range. So from the high to this low, and the same goes for the bullish pin bar over here. All right, so this should be 2/3 of the entire range. And the color of the body doesn't really matter. All right, so it doesn't matter if this was black or white. Same goes for this. If this was a white candle or if it was a down day and it was black, that doesn't matter. What matters, again, is this tail right here. All right, so let's take a look at an example on the New Zealand dollar. And this one actually occurred, it's a bullish pin bar that occurred at horizontal support. So we had this level right here, and you can see where it was tested once before. All right, so we had this retest, and then we had this bullish pin bar that formed. Now again, notice how long the tail is. So this is certainly 2/3 of the entire range. And there's two ways to enter this, this type of candlestick pattern. The first is to, in this case, buy on a close above the high, and our stop loss would go below the tail. Now the second way is actually to do a 50% entry right here using the Fibonacci tool. The upside to this is that you can increase your R multiple. The downside, of course, is that you won't always get filled. So if you notice here,